All right, everyone, welcome back to the channel and thank you for tuning in to another video. Let's talk about imbalances when we are trading supply and demand on the daily, okay? It is an essential part or ingredient to the way I trade, okay? If there is no gap or void at resting at a zone, all right, I'm not interested. That's what makes the area a high probability zone, okay? So what I like to see and I have to see is that void resting back at either a supply or demand area. All right. Imbalance trading is powerful stuff. You know, if the market is moved hard to the downside, coming out of a, let's say after the broken structure and it's created a supply area and it's moving to the downside, we know because one, we got to break a structure. And two, we got a major supply area or zone where there's aggressive selling that took place. The market has to correct itself and go back and fill in those imbalances, okay? In between those candles, all right? All the way back up to the supply area, okay? And I want to show you something today because a lot of people, sometimes what happens is when we're trading, especially on range charts, you will see imbalances resting inside the zone. There may be 2 candles, 3 candles that form within a zone. Most times you'll see like maybe 2 candles and then maybe it'll break the area, okay? Meaning if it's moving down and breaking through or creating an area of supply, there may be 2 candles within inside that zone. And there may be an imbalance resting on the inside of that zone, even after, you know, where the market is pushed lower and broke below that last, say, bullish candle, on its way down as it's creating an aggressive force of selling off, there could be an imbalance resting on the inside of the supply zone. And sometimes the market will go back up there and tap into an area of supply and not feel that little small imbalance resting inside the zone. So I want to kind of just show you some instances and talk about some things that you can actually do, because I've gotten comments or messages from just, you know, positive traders that are part of the community and ask about those imbalances resting inside the zone. Is it smart to wait for the market to tap into those imbalances inside of a supply or demand zone, or just if it rejects the area of supply or demand when the market taps into that zone? And once it taps into that zone, should we take the rejection, you know, immediately? Okay, let's talk about that, because a lot of people, they tend to like to wait until the market taps into maybe the imbalance resting inside that zone. Nothing wrong with that, okay? And that could primarily happen when there's a second test, meaning the market tapped into, say, a supply zone. I'm gonna show you like an example right here, and then it rejects it. We see maybe a breaking of a candle, a close of a candle in the opposite direction, and then the market goes back up. And sometimes it'll go back up there, try to feel that imbalance resting on the inside of the zone. So here's an example right here. And if you don't know much about supply and demand, I highly recommend, I want to stop and say that, that you learn it, because I mean, it is powerful stuff. All right, what you're doing is you're getting into a move or into a trade at the origination point from which the trade started, if that makes sense, okay? All right, that's why I don't trade support and resistance, primarily because most times when you get into a support and resistance type of trade, you know, a lot of times you are or will become liquidity, all right? Because you're basically taking a trade back at a halfway point of a move, and that the move may have started deeper within inside of a swing, okay, where that zone rests at. So taking a trade back at a halfway point, the market could come back down there, hit that supply zone. I mean, it's not supply zone, that support area, bounce, and then you maybe think you're in the positive, and the market then comes back and stops you out. So you have to understand they're setting you up to stop you out lots of times if you trade support and resistance. But I'm not gonna tell anyone how to trade. I'm just letting you know that I trade supply and demand, and I have tons of videos here on the channel where you can basically watch them, educate yourself. Guys, I'm not a teacher. I'm not a mentor. I'm not an educator. I put that out there because I'm just providing content that is helping people. I really will say that, okay? Come over to the Discord community. Join the Discord community and find out for yourself. The link is down in the description portion of the video. It's free. Come in and invite yourself. We have traders that are daily, either they're passing valuations or trading with their own personal funds, but they have come over and learned something, I guess, through the videos, you know, just by watching and spending time watching the videos, because I drop a lot of valuable content that I feel is just very good, you know, information that people need to really know, okay? Just like today's video about the trading imbalances, okay? So here's an example right here. This is today on the NASDAQ on my 12 range chart. This is a supply zone, okay? Look, the market retraces back to it. There's a supply zone resting right here, okay? There's a void or gap from this massive drop to the downside right here, okay? Aggressive selling. There's an imbalance or a void, if you want to call it that. From the bottom end of this green candle to, the area in which the market turned back around and started being bearish and breaking through, okay? So there was a gap there, okay? And I show that time and time again within the videos. I'll show it to you just for this one instance right here when it comes to the gap or the area I'm talking about. From the bottom end of that green candle, basically to the top end of this red candle right here, that's the wick of it right here, okay? That's a gap. That's an imbalance or, a void back to the supply zone, okay? But pay close attention. There is also imbalance in between this candle here and this candle here, okay? So there are areas that need to be filled right here. There are imbalances inside of the supply zone. So people ask this question. Now, if the market just taps into the supply zone, stops right here at where the supply zone actually starts at, okay? And then I get the rejection, all right? Am I safe to go short? Most times if you get the break of the candle in the opposite direction, the break and the close of the candle in the opposite direction, like this last bullish up candle here, we get the break and the close below it, you're solid, okay? And the market's going to come down and test some lower areas, right? And you have to know just by understanding and studying price action where it can stop at, meaning where to take profit at, okay? But also be mindful too. Lots of times if you don't see that close or that break and close below the last up candle when we're talking about a supply setup, what will happen here is they'll tap that zone there, okay? The market will pull down just to push back higher, all right, to test an imbalance within the zone like it did right here, okay? You can see when the market pushed up here, what did it do? It pushed up, pushed a little deeper, but it wicked into the zone. It didn't feel every bit of this little, let me blow it up a little bit more so you can see it. This little imbalance within, you see between these two candles right here? That little space, that little area there, that's an imbalance resting right there. It came up there, it almost filled it in. It rejected and then came up and filled it in, right? And then it rejected by going short, pretty much, selling off, right? Now, what it could have also done is this right here. It could have closed in this void, okay, or imbalance right here, all right, okay? Then push down and then come back up to test the one above. But it didn't do that there. What it did was it came down and it started breaking below this candle here, okay? It came down, pulled back, and then broke lower. And then you can look for opportunity to go short. When you start seeing a sign like this right here, which a lot of experienced professional traders will tell you, like this is what's called an information, where the market is tapping into a zone several times and it's struggling to push higher, that's a sign of rejection, okay? But again, the market, when there's imbalances resting on the inside of a zone, once it either taps the first time into that supply zone, or it could be demand, this case here is supply, all right? And then you see these imbalances in the zone, okay? These little gaps in between the candles, which are imbalances, it can definitely reject right at the first test of the zone, push lower to come back and fill those imbalances, okay? So a lot of times you get a second test. That's what it can be called, okay? It's not quite finished yet, all right? It taps the supply zone, rejects it, it goes back and fill the imbalances. But most instances, 8, 9 times out of 10, when it first taps the supply zone, in this case here, even though the imbalance is resting within that zone and it breaks and closes below the last, like I said, bullish candle, it's more likely going to go short or start selling off. But what you could do that, also if you want to be more conservative, take a more conservative approach to see if it's going to wait and fill those gaps, be patient then. You can just wait it out and see what happens. It rejects the zone, pushes down a red candle, pulls back with the green candle, fills one imbalance back into the zone, and then that's basically a second test with a rejection there. Reject once, red candle, pulls back, rejects 2 times, or the second time, you can look for an opportunity to go short right then and there. Now, that's an example there. Sometimes you won't see there will not be an imbalance resting inside the zone, and that's great because all it has to do is tap into the supply and then reject and push lower. Then sometimes what you'll see is it will tap right into the supply zone, okay? Fill the gap of void back to the supply zone or demand zone, and then it'll push even higher into it on its way, meaning it'll just push right into it and cover the imbalances as well, meaning it'll go right into the imbalance, okay? I'm gonna show you an example here. All right, you see this right here? This is a supply zone as well. Why? Because it broke structure below and let's move to the downside, okay? Anyways, it pulls back. See the supply zone or a little small little gap of void we have, all right, at the zone itself, but there's also an imbalance resting on the inside of the zone. Look what happens. The market doesn't stop the first time or first instance of hitting the zone there, okay? Moving or retracing back to the zone. It pushes deeper into the zone and it taps into that imbalance there. Great stuff, because now we know it's pretty much scrubbed every area. It's went back and filled every area, okay? Filled the gap or void back to the supply and the imbalance or any imbalances rested into. So then at that point, all we're doing is looking for rejection, definitely with the close the break of the candle in the opposite direction, closing below this last bullish up candle here. That bearish candle closed below, we're looking to go short, right? Boom, we take our short, going short, okay? Demand zone, okay? Area of demand, making higher highs and higher lows. Aggressive buying, the market pulls back to the demand zone, okay? Look what it does. It taps into the demand zone and pushes further into it. A small little imbalance there, it also fills as well. So once it taps into the demand zone, fills the imbalance, and then we get the break. That last bearish candle to the downside, we want to wait for the break above that, okay? All right, meaning the bullish candle that closes above that last bearish candle down to the downside. Wait for the break to go long to take out the high up here, okay? Simple as that, okay? But again, this is another example where it goes deeper into the zone where we have an imbalance, and it fills in that imbalance as well, all right? Another example right here is supply zone, okay? Market pulls back to it. Look what it does, okay? It taps into the supply zone, pushes higher to fill in the little imbalance on the inside of the supply zone, okay? Rejects, break, close of the candle below, go short. Demand zone. Market comes back to the demand zone here. Look, the demand zone starts right here, okay? But look, we have an imbalance on the inside, imbalance on the inside of the zone as well. When the market retraces, look, it taps into the supply zone. The demand zone, right? But it pushes even further into it to fill in the imbalances even resting on the inside of the zone. That's a bullish candle right there. Typically, most times, I'm going long at the break of that candle there. Now, you can wait for the break above the last bearish candle to the downside to go long as well, all right? That's another example. Now, here's a good example of what I was talking about it sometimes not moving into the zone and filling in the imbalances inside the zone. This is a demand zone, okay? All right, aggressive buying to the upside, okay? Got a small breaker structure here, aggressive buying to the upside, pulls back. Taps right into the demand zone. There's an imbalance resting on the inside. Look what took place here. This is where I'm talking about. So sometimes you can wait it out and see if it's going to do so by allowing it to tap into the zone, all right? And then in this case here, it pushes up and it comes back for a second test. Now, I'm going to say this because sometimes it doesn't happen like this. It will not just give you a second test. Sometimes once it taps that zone, it's going in the direction that it wants to go in, okay? Either up or down, okay? In this case here, this is a demand zone. But if you want to be very, very, very conservative and wait to see if it's going to actually tap into the zone and fill that imbalance. Now, it will fill that imbalance at some point. We just don't never know. But I'm trading supply and demand, and if I see that it taps into an untested area or zone, which makes that zone high probability to me, even on the first test where it comes back and fills it and there's an imbalance there, and it's showing me bullish momentum to the upside, I'm taking that trade, okay? Now, I know that it can come back and try to fill that area there, and I have to be mindful at that point to possibly maybe get out the trade, all right? Because the fact is that it's coming and test the zone, pushed away from it, and then coming back. But normally what you'll see is something like where it will tap the zone, push up, come back, okay? Still not fill the imbalance in the zone, and then make a higher high. Meaning swing it to the upside, and then it may try to come back, okay? Just as it did right here. Take a look. Pushed up, pulled back, pushed up, pulled back, didn't tap the imbalance in the zone, okay? Then it started making higher highs and higher lows. Then it started swinging back, okay? Retracing and tapping into the zone. At that point, I'm not interested. You know why? And most of you that been following the channel know why. The zone has already been tested, and it moved away from it, okay? It's taking a while for it to get back to that zone, and when it gets back to that zone, I'm no longer interested because now it's already been tested, so it's not a high probability zone anymore. So What I'm trying to say is that lots of times that the market will just test the zone for the first time and move away from it. If you want to wait for a second test to see if it's going to do so, you can do so. In this case here, this is even a good setup because the fact is that it tapped the the demand zone, didn't feel the imbalance, pushed up, came back for a second test, and again, this is an opportunity to go, to go long because you got a bullish hammer candle here to the upside where it came back, wicked the zone, and then took off to the upside. Now, it could have come back and tapped into this area here, and you can still look for opportunity to go long. As long as it doesn't, start breaking structure to the upside and then come back to the zone, then, just a quick tap into the zone, pull back and then come lower to tap into the zone, to fill the imbalance. That's you can still look for that to be a clean setup, okay? Because it hasn't started making higher highs and higher lows after tapping into the zone, okay? When it did, this came back over here this time after making higher highs and higher lows and filled in the imbalance. I'm not interested, okay? But I just want to show you guys some examples of things to really look for, be mindful of, because I know that there are imbalances resting on the inside of the zones when we're trading range-based charts. Some of the other charts, maybe time-based, you don't see those you may not see imbalances resting on the inside of a zone, but I don't like trading time-based charts. If you do, nothing against you. It's just the fact is I like trading what I've been trading for years. It just looks smoother and cleaner to the eye to me, and that's why I trade, all right? And I know how to because I've been doing it and have experience doing it for so long. So if you trade time-based charts, tick-based, volume-based, whatever you find that's been working for you, stick with it, okay? I say this, and I say this time and again. If something is working for you, please do not deviate from it, because that's when you start getting yourself confused, all right? But I just want to cover in this video again today about trading imbalances, knowing how to trade them the correct way, and things to look for. But I appreciate everyone who's tuned in on the daily, watching the videos that I drop. I know I make a lot of videos, but I'm here to make a lot of videos for a certain reason, and that's to share valuable content and information that I definitely know is helping people out. If you come over to the Discord community, you will find out for yourself. We have traders that have been trading for years and weren't making money or weren't profitable and were struggling, and then they come over and start watching the videos here on this channel to get a better understanding about supply and demand, and now they're becoming successful. Okay, they're seeing their light. They're not losing money anymore. They are slowly building up themselves to become profitable. Okay, so be part of the team here. Click on the subscribe button. All you gotta do, hit that sub button. Make sure to turn on all your post notifications. And last but not least, please drop a like on the video. If you're interested in joining the Discord, find that link down in the description portion of this video. One other thing, people always ask about the Elite Channel membership. It is a tier-based program through YouTube, okay? If you click on the join button, okay, on the channel, you'll see a little join button somewhere to subscribe or the share or one of those buttons there, okay? Join. You can click on it also over on the home page on the channel. You will see two tiers pop up. The Elite Channel membership tier is where you receive my trade breakdowns, where I go into detail about the setups and just basically giving you an inside a scope of my thought process behind my trading. Okay, I break things down for you as if you're sitting right next to me when it comes to my trades. Okay, all right. So you get the trade breakdowns. You get that video playlist that you don't have to watch 600 videos. I hand selected a series of videos from the channel that I feel cover the most pertinent information surrounding supply and demand and how I trade. All right. So this channel is about me expressing my experience and how I personally trade. Okay. So if you want to become an elite member, you're asking what? How much has it cost? $6.99 a month. Okay. All right. So if you spend $7 a month, okay, versus spending hundreds of thousands of dollars trying to learn something or understand something from somewhere else. Maybe you know what I'm talking about. Maybe you have spent and bought 2 and 3 or 4 different trading courses or mentorships or whatever the case is, and you haven't found no success in it. Well, we have people that are finding success here on this channel here, especially over in the Discord community, just by becoming the elite member for $6.99 a month. You may be asking, well, why are you giving the information away? I say this all the time in my videos. I've been saying it since day one when I started this channel. It's just my way of passing things forward to help individuals out. I just feel like I believe in if you know something, then why harbor it? Share it with other individuals so that they can find success as well. Because to me, ultimately, at the end, I day trade. I trade the index of futures, and to me, it's like I'm already profitable making money doing that. This part here is just me being able to give back. And I told myself, when I get to a means of being able to give back and become profitable, this was going to be my way of doing it. So that's why I'm sharing what I know, okay? But again, I appreciate everyone tuning in. Again, if you want to join the Elite channel membership, click the join button. Again, scroll down, you'll see one of the tiers that says Elite channel membership. Join that way. I appreciate everyone that has joined. We have a lot of individuals that have signed up and subscribed and become Elite channel members, because in those that are finding success. All right, they have started to see the tide shift. They find success in their own trading, and I didn't have to hold their hand. They actually watched the videos. Okay, all right, and they grasped how I actually trade. All right, now, all right, spend some time practicing, back testing. You have to put in the hard work. All right, but that's all I have for you guys today. I appreciate everyone tuning in on the daily, and I'll see everyone in the next video. If you are a Elite member already, I dropped a trade breakdown video today, so go back and watch that over on the private sector of the channel. You know, those that have access and are Elite channel members already, you have access to the videos that I'm talking about. So go ahead and watch that trade breakdown video for today, covering the trades I took, so you can see the trades I took, okay? But anyways, I appreciate everyone tuning in. Take care, and I will see you in the next one.